Good morning, and thanks so much for tuning into the trade setup. I'm Neeraj Shah. Let's take stock of so much of news flow in this on this expiry day, since there has been news flow since last afternoon when the holiday was shifted from today to tomorrow. So becomes an important day of trade. First, the global markets and the US market cues and how they fared. Well, they bounced back remarkably well, and that alone should uh, give confidence that we'll do well. Now, if you add to that the fact how we did yesterday, well, that probably more in store. So, and we'll come to that in a moment. First, the global news flow. Asian shares, by and large, are primed for gains. Yields have pushed higher. Excuse me. India January to March CAD numbers narrow further on a lower trade gap. Gold is near 3 month. No, not the trade setup plate. Let's move on from here. Gold is near 3 month lows as US data reinforce tightening bets. India plans $2.6 billion of battery subsidies in clean energy push as per FT. And Vedanta deepens the tech push with $4 billion India display factory. The SGX Nifty indicates a positive start, trades higher, and this shouldn't surprise anybody. Now, the trade setup for the day today. Well, remember, we spoke about this yesterday. We should trade the market and not the forecast. So volatility corrected yesterday, and Nifty Financial Services was up about 1.37% as the top gainer, followed by Nifty Private Bank. Just shows what the HDFC Bank announcement and the general mood around financials would be. Now, if there is a sharp uptick in BFSI today, by virtue of various reasons which I'll come to, that might trigger covering of the 18,800 calls on the Nifty as well, and probably set up a stage for a large up move too. And while there are concerns around the small cap valuations keep on lingering, strong businesses in capex theme, auto ancs, real estate, and ancillaries just continue to find favor. Look at what happened yesterday in trade, right? I mean, you saw SKF above 5,000 after such a long time. A lot of capex related themes, Rolex, rings, uh, so on and so forth, that the small cap end of the market are doing well. We saw auto ancillaries doing well. We've seen what's happened to Ram Krishna Forgings, for example, or a couple of others. The company that we interviewed, Shyam Metallics, talking positively about their outlook, and that stock did well. Metal company, not an ancillary, but I'm just saying. Or, Titagar Wagons, which continues to find favor, and some of the real estate beneficiaries. We know what's happened to Astral. And by the way, there's a really interesting conversation with Astral coming up on Friday. But I'm just saying, we know what's happened to Astral post its numbers. So just this set of things which continue to do well. And frankly, the response to Idea Forge as well as the Sign TLM IPO, particularly Idea Forge, um, seeing such a strong investor interest tells you a thing or two about the mid-cap momentum right now. Sometimes it looks scary, but for strong businesses, not necessarily so. So, amidst all of this, what are the stocks to monitor in the session today? Why I say financials? Multiple reasons. One, just the traction that we've gotten to see in banks, and particularly the HDFC twins because of the merger announcement. Two, S&P Global Ratings has raised the standalone credit ratings of SBI, HDFC Bank, and ICICI Bank, and a few others too. But amongst the large ones, these are the ones. So SBI has been upgraded to triple B from triple B minus. ICICI Bank upgraded to triple B from triple B minus, and HDFC Bank upgraded to A minus from triple B plus. Now remember, the first time that SBI has moved past the sovereign rating in its life, and that is a big statement, right, for a PSU banking stock to get this rating as well. So I would suspect that this could trigger. I may be wrong, but I believe that this could help the sentiment in the BFSI space, particularly for SBI, but I think some of the others too. The fact that HDFC Bank, the merged entity, is finding a lot of takers and a lot of fanfare is also positive. Bernstein, for example, has put out a note today citing that their target is 2,300 on the merged entity, and they believe that there will be more in store. So this is a big landmark event, and I think one should keep a keen eye out for that. Then HDFC Life will be in focus because HDFC bought another 0.7% stake in HDFC Life at 667.1 rupees yesterday. Remember, they still need to buy another 0.65% to have over 50% ownership. And they're on record saying, right, that they want to do this. And therefore, I doubt any negativity continues in HDFC Life. And if HDFC Life gets that premium, some of the others might do that despite these GST show cause notices that are coming to these companies. So I suspect that that's some momentum there for HDFC Life. If not momentum, no downside there. That's the limited point. So financials, right in the thick of things, right in the thick of things. Then, speaking about Titagarh rail wagons moving up yesterday, well, it's received one more order, an LOA for gauge cars from GMRC worth rupees 857 crores. Now, this looks small relative to what the size of orders that they won recently is, but relative to the annual order performance, not at all small. And therefore, this should help the momentum in Titagarh rail wagons. Again, I'm not suggesting one way or the other that the stock will do well today or tomorrow or day after. I have no idea about it. But it is finding favor, and it is probably finding favor for these reasons that the order inflow, the book to bill, continues to be impressive. The last time that we spoke to Umesh Chaudhary of Titagarh, the book to bill ratio was 10x, and that was before they received some of the other orders. So, pretty strong show. Gland Pharma could be in focus. US FDA has conducted pre-approval inspection for 7 products at the Hyderabad facility between 15 June and 27 June. Now, we've seen some companies which have gotten observations as well, shrug off the observations. We don't know what the update on Gland Pharma would be from the US FDA, but it could bring the stock in focus. So bear that in mind. Then why I think KPIT Tech could be in focus? Because while the JP Morgan forecast about KPIT Tech was wrong, their assessment of KPIT Tech getting a niche premium is not wrong. And now with SEBI approving the first public issue from the Tata stable in 20 years, which is the Tata Technologies IPO, I would suspect that this might impact the niche premium of KPIT Tech. Might, I do not know. So watch out for KPIT Tech, could be in focus. Then some news on batteries. India is planning a subsidy scheme of 21,600 crore rupees for companies making electricity grid batteries. Apparently, we're planning production-linked subsidy scheme for companies to set up manufacturing capacity for 50 gigawatt hours worth of battery cells, which is important. The scheme would offer this amount from 2023 to 2030. This is as per FT, by the way, so keep that in mind. But is this positive? Yes, it is. Could it impact some of the battery companies? Maybe it could. And in fact, just on those lines, MK Alternate came out with a note on Exide. They say that there's a strong build-up in the June expiry seen already, a 13% OI in the last 2 weeks, and an 8% price gain. They believe steadily rising, the stock is steadily rising, indicating buying interest in the derivative segment as well. And the delivery volume in the last 2 weeks has been 2.2 times the monthly average. Well, there's certainly some buying interest there that has happened already, maybe more in store. Maybe this news around the subsidy could be something that adds a further zing to the stock price of Exide Industries. So do watch out for that one. Then amongst brokerage notes, Jefferies has come out with a note on ITC. They say it's a buy. Target price has been raised to 530. They say an alternate structure for hotels might be on the cards because the chairman in the recent media interaction has reiterated that ITC is considering an alternate structure for business. The reason why this is important is that, I mean, it's a high capex and subpar return profile of the hotel business, which kind of dampens the multiples of the FMCG business. Now, if they manage to split, then there could be value unlocking. Hotels, anyways, in a good flow right now, but relative to FMCG long-term valuations, hotels don't get that. And maybe ITC, the unlocked entity, might get that valuation. And therefore, I think there is some optimism that Jefferies seems to be finding there. Mind you, like I said, I think the other key notes include a Bernstein note on HDFC Bank. They reiterated a buyer target price of 2,300. I haven't given that note, but keep in mind that they are saying there's a 2,300 target on that one. So do watch out for that one. Trying to think what else, if I'm missing something, give me a second. Critical minerals list to be released for the first time, so that is a thing to watch out for. There is yeah, there are some other notes, other reports about how some of the stocks have done well, and how global investors are looking at it as well. So yeah, the Spark Capital has come out with a note on the EMS space. they have initiated coverage there. So that's the other pocket. That's the Sign, DLM, Dixon variety. So do watch out for those stocks as well. Lots of conversations today. Manish Gunwani of Bandhan AMC joins in at 10 a.m. on Talking Point. Uh, Very good thinker, and it'll be lovely to talk to him about so many issues, including this whole financials and HDFC Bank, etc. So that's a conversation to monitor today at BQ Prime. A clutch of others during the course of the day as well. And Friday, it's a set of very big conversations, including Astral, including Talking Point, including a few others. So, yep, some exciting coverage coming down your way at BQ Prime. Thanks so much for tuning into the Trade Setup today.